Looking at the volume on the weekly chart for the S&P 500 is quite interesting, really, because, well, this is the weekly chart and this is the volume, of course. So from this low here, we've had that increase in volume, and that's turned the market around. Nice bounce off the 3A. The move up through here has been on lesser volume. So if the price moves up and the volume diminishes, that's divergence, and you'll see that in your indicators. This is what I find a little bit more interesting, is that we have increasing volume here, but really the market's not going anywhere. So one could say that there's, well, the first obvious thing is folks would say, well, that's, churning over at that point, and that would be true as well. But really it's a bit of a battle that's going on there between the bulls and the bears at this particular point in time, and we need to see who comes out on top, and whoever comes out on top will obviously see increased volume move in that particular direction, either up or down. Now, being the S&P 500 here, this is the weekly chart, of course, and if we take the top here and the bottom here, because I'm just taking, sometimes with Elliott it's clear and it's all good and you can just jump on and go for the ride, and other times when we're in corrections, and we're certainly in a correction coming down here, but we don't know if all of this here is just one leg. This would be the A, the B, and the C wave coming down here. So that's a real possibility. It's also possible that we can be in a bullish pattern as well, because really the move down through here doesn't count as an impulse wave. Because if you looked at this as 1 and 2 and 3 here, or even 3 to here, and 4, straight away you've got overlap from this top to this, either of these lows here, whichever way you want to count it. So it's got overlapping wave structures. So we know that the move down can be corrective. We can view it as an ABC pattern like this, and then we need to configure this into a bullish pattern, and we can do that by going wave 1 to here, an A and a B and a C for wave 2 to here, and then wave 1 and 2 and keep building to the upside. You could go 1 and 2 and 1 and 2 and 1 and 2 to the upside. You could go that way with it. But for the bearish pattern, we could also look at all of this here is the A, the B, and the C wave. We could just look at that as, I'm just being realistic here, and we're just sort of shooting the breeze really, and we can look at this as an ABC pattern to here, and then an A and a B and a C pattern either to this top here, right, or we'd be looking for another little 5 waves to the upside over here for that. And this is what we'll be talking about today in through here, and then we'll have a wave C here. Now, if this was one leg here and this is another leg here, this will be the 61.8% at the 4,300 roughly, then it would be logical to think that as a starting point at least, that we could consider this leg down here to have some sort of equality from the 4,300 or from this current top here, and that would bring us down into closest to the next largest number here, around to the 3,000. So that would all be sort of, there's all these logical outcomes for this. So what I've been doing, as you know, I've been looking at the bearish side of the market and the bullish side of the market. And because I don't know which one's going to be the outcome here. They've both got good cases for them. They're stocks that have moved all the way up here, testing the highs over here, say Apple. There's stocks like Google that really haven't gotten off their lows here that much, and their patterns off the lows here, yes, you could look at them as bullish patterns, but they fit better as bearish patterns. So there's a whole cacophony and a mixed bag of messages that are in the market, and you can see that from listening to other professional people that approach the market. Many roads to Rome. You can see things in different ways, and there's plenty of information out there, and they all seem to be a bit like myself in a way that, well, I don't know if it's going to go up or it's going to go down. All I can do is understand both sides of the argument, and in Elliott wave terms and volume and price, and then also just work the intraday count and duck and dive and weave and try to make some pocket money along the way until we get sorted out. And that's the thing with Elliott. Sometimes you're just stuck in a correction and you don't know what it is, and that's okay. It's okay not to know. So then you've got to kind of find out what you do know and what you can work from that particular point, and that's what we're trying to do. So there's two sides to the coin at the moment, and that's that. There is a good case to have this as 1, 2, 3, 4, 5 and have that B wave on top there on the S&P. However, the Nasdaq appears that it would like to go further up. So if the Nasdaq's going to go up, well, then it's likely for this market to go up here further. So in that case, we can look for a little 5-wave move up through here on that, and then we'll be closer to the 4,300 area, this whole top over here roughly. And that would be a nice little posse for the B wave at that particular point in time. So I won't know if we're going to be bullish and bearish just yet. So we would need this this little 5 waves to play out up to the 4,300, and when that does play out here and we get to the top, we can track the 5 waves up. That's not a big deal, but when after it tops, it can either come down or we can have another sort of ABC pattern, and then we can move up from that point. So it's only in this area here that we'll be able to really identify where we are at this point. Now, sometimes stocks, there will be leaders and followers, and in those leaders, we may be able to take a lead in all of that. So we'll just have to still continue to be patient within all of this. Yeah, that's where we are at the moment. And this whole correction here really is all about the 4,000. Of course, that's the closest, largest number at this particular point in time. And yeah, look, in the meantime, if the 4,000 here became the resistance, then you know that, well, it's pretty much over at that point, and we would be moving down at this point. It's fine for it to come back and retest it and then move off from that point. That's just normal for a market as it moves higher, and it doesn't always have to, you know, it'll come back and check it. It may hold, it may not. If it holds, well, then we look for a long trade setup. And the same with this here. If a market moves through a number in any direction, if it's down, it'll come back and check it. If it moves up, it will come back and check it. So that's always good to know. But that's really where we are. So let's just go into the intraday. We'll have a look at the bearish count and the bullish count, and then we'll just really sort of soak up into the intraday here. One of the interesting points, though, if I go to just, I want to go to the S&P low volatility stocks here. So this is the Johnson & Johnsons of the world, the low volatility. And in this case, I kind of find it interesting because we can look at this as an A and a B and a C. There's no way that this is really a 5-wave structure to the downside. So we could have an A wave here, an A and a B and a C wave up here. So once again, we would need to see in this instance here a 5-wave move here for this, 3, 4, 4, and 5 here for this, and then we could come down for a C wave here. If it goes this high up here, then it'll come back to the A wave here, so it'll be more of a flat correction, a 3, 3, 5 structure at that point. But one would also say too that this particular 5 waves in weeks here, you know, this really puts in a completely different timing event for the S&P 500 and the Nasdaq at this point. You know, I would like to look at this as more of a bullish pattern in terms of an A wave here, a B wave here, and a C wave here, and look at this as wave 1 here and back for wave 2 here. But I do find just sort of the wave 2 here a little bit large. Wave 2 are normally sharp and swift and simple and take less time than wave 1 to move to the upside in most cases, in 90-odd% of time. So but yeah, we do have a little 5-wave structure here, and these are weeks here, not days. So this kind of puts a bigger bullish picture into the frame. So I think that's kind of interesting, really. So anyway, enough waffling. over to this particular charting program, and we're on 50,000 ticks. So 50,000 ticks and 1,000 ticks, we keep our bearish count, and our bullish count is over here. Sometimes I mix them up a little bit if I'm short on space, but on canvas. But yeah, so the bearish count would be all the way down for the A wave, an A wave here, an A, B, C for the B wave, and then 5 waves up here. So what we're really looking for here, in a way, we'll drill into this. We're looking for 1 and 2 and 3 and 4 and 5, and that would take us up to the 4,300, the old high over yonder, and also the 50-60% retracement level. So if this market was going to fail, then this would be the next place that it would fail from and come down from that point. So all we need to do, we can trade the third wave up here and have our piece of the cake, and maybe even the 5th wave here. Now, once that's done, then we just need to chill at that point, because we would need to see, you know, some sort of counter trend here before seeing further upside here. Now, the problem with this counter trend here is that it would have the same internal structure here as 5 waves, 3 waves, and 5 waves, as would the bearish market. It would also have 5 waves, 3 waves, and 5 waves, and 3 waves. So it's not until it comes way over into the corner here that it corners itself, and then we can come out looking for the direction at that point. Now, there's always other ways to work these sorts of things out through other markets. So we'll keep an eye on the rest of the financial system in terms of, you know, the bonds, the dollar, and so on. So, so that's the bearish count in a nutshell. And this is really the bullish count as well. We're just looking for these 5 waves up here. Now, there is a possibility that it's a bit of a long shot, and it doesn't really apply to the Nasdaq, just this one, that we could put wave 5 here, because it just depends on how you want to count this up here. I mean, when I count this here, I can say 1, 2, 3, 4, 5, and I can have an argument with somebody and I've got a case. But I don't have a case to argue in here. It's a bit of a guessing game, so this can be construed in different ways here. But I've had the label at wave 3 and 4 here, and because it took out the low here, the Nasdaq did not take out the low here. And with the Nasdaq, we can count that up as wave 1 and back for wave 2 here. So when we look at the Nasdaq here, this is it here, with the S&P here took out this low here, but the Nasdaq here had a beautiful 1, 2, 3, 4, 5 up here, then an ABC pattern. So in a way, the Nasdaq has actually got an extra wave in it to the upside. So I'll have to correct that somewhere along the line, find out where I've gone wrong. Or see how the markets actually pull together, because they will markets and stocks can have different wave counts, but you know, internally they kind of move the same, you know, on an intraday basis most of the days, unless they've got sort of news, but they will top and turn pretty much together on the same day, so to speak. So in this case here, we've got 1 and 2 and 1 and 2. In this case over here, that blue wave 1 and blue wave 2 here, that's what we've got over here, blue wave 1 and 2. So in a way, they're kind of the same in a way. But this, the S&P is sort of lagging because it made this low below this one here. We can't label that blue wave 1 and 2 and 1 and 2. Anyway, if you followed that, you've done well. Yeah, so that's where we are. So we really just need to sort of understand this here for this. But like I said, for the S&P, it's possible to have 5 waves here of just 1, 2, 3, 4, 5 and have it done and dusted. But we'd need to see this collapse, and yeah, it's not collapsing at the moment. And the thing is we can just buy new highs, really. That's all, to catch that 3rd wave. It's kind of that simple, but there's always room for improvement. So I'm not sure what. Well, let's have a look at the bullish count while we're talking about that. So the bullish count would be this is a bigger bullish count, of course, with wave 1 over here, wave 2 here, and then wave 1 and 2, and then we've got a little 1 and 2 here. So this is, you know, it's not going to help us by understanding this, because we've still got to get past. We still have to get past these 5 waves here, whichever way the cookie crumbles, you know. it'll be something like this here. Fail to find support on top of, if you know the trading levels, medium level 400 here, group 2 below, group 1 above. If it finds support, if it get a tested support on top of the 300 here, then we'll be going further up. But that takes a little bit of time to establish on that number there. So the fourth strongest number, 1, 5, 8, and 3. So anyway, all we're doing is working these 5 waves. We don't know what's going on in the market, but we do know that this is looking good for a wave 1 and 2 in here. This is a pretty good ABC at first sight here, but I have to say it can count as 5 waves down, as a little 1 and 2 in here, and 3 and 4 and 5. Now it's pretty clear on so it can count 5 waves down here, and on the futures market here you can count this up as 3 waves up here. On the cash market that would count as 5 waves up there. So if we just have a look at that here just closely, this little 5 waves from the low here counts up. This is a 5-minute chart on the actual cash market, the 1, 2, 3, 4, 5 here. So really we've got 5 waves up. We're looking for some sort of ABC correction that currently can pull back to the 50-60% retracement level. So it could, doesn't have to, but can come down to this area through here for this. So you can see quite clearly this little move up here is in 5 waves. Because the futures market has got the odd hours to it, and it's also got a different low here, that's the low on the futures market. So we've got that little move here, and this low's above this one, and so on and so on. So it makes it a little bit different. We can still just put this here and have 1 and ABC for 2 here. So yeah, it looks like a reasonable 5 waves up here. So all you need to do to make money in this is really just buy new high here. That's pretty much the go of it all. But we'll get to that. But I just wanted to point out on the actual cash market that it's a nice 5 waves up there, and easy to see, and there's a nice ABC pattern here for this. Interestingly enough, the Nasdaq has taken out, its little 5 waves that are coming up here have taken out this top over here. So that tells me that we can look at this as 5 waves and look at this as a corrective wave, and we should be moving higher up here. So this top here, this little 5 waves here, is a bit shorter than the Nasdaq. The Nasdaq has taken that top out where we had that as a small wave 1. So over here, if you can see, we've got this as 1, 2, 3, 4, 5 here, and we've taken the top out here. So it does present a really good case for moving higher here. Now obviously we'll take a look at this, because this Nasdaq can pull back to the, if we take this over to here, it can pull back further in here. So the 3852 can pull back into, oops a daisy, what have I done here? It can pull back into this space roughly here. You can do your own homework on that, but yeah, it can come down here, and the stocks that are going to bring it down here are going to be stocks, there's a mixed bag of stocks out there at the moment. Okay, so what I mean by that is that Tesla's trending up, and you've got stocks like Google here that have got a nice 5, this is 100 ticks here for the folks that know that, 1, 2, 3, 4, 1, 2, 3, 4, 5 for the A wave, a little B wave, and a C wave here. So this is, Google's not finished. Microsoft is not finished. So there's some, Amazon's pushing to the upside. So there's a mixed bag of them out there. So, obviously the average of all of those, will affect these markets in different ways here. So yeah, this can still move down here. If the 200 here, 13,200, becomes the retested resistance, then we'll just drop down, lower at that point. But yeah, that's that really. I mean, this here, moving up here, we'll talk about that in a moment, because I can still count this as wave 4 over here. It doesn't, because this is just really 1, 2, 3, 4, 5 for 1 and 2 here, and then 3 here and 4 here and 5 here. So I really prefer to put this over here and this over here, but the cash market's not telling me that, anyway, we'll come back to that. I just wanted to point out that this has taken out the top here. So it gives it that little bullish edge, which is quite nice. So even though we're not seeing it on here, so you're probably better off. The Nasdaq is the one that's going to range the most, you know. Basic indicator here, the stochastics, it's on faster speed here, but you can see that it's pulling down fast, you know, from this trend here, you know, this whole trend up here. This is the price has pulled down a little bit. This has pulled down a lot. It's like the trigger being loaded, the spring being loaded, you know. That's a good thing about the stochastics is not so much the, you know, the high and the low of it, but the speed in which it moves. Anyway, we need to move in on here. Sorry for yakking so much. I'm not sure where we're at with this, so I'll just try 1,000 and then 100. Okay, so this will just do the trick. So yesterday we started counting up here, and yesterday I had it as a wave 3. I kind of like, I mean, because of the futures, see how this low is different from this low and stuff. So that means we need to look at it from here, and it does look like a little 5 waves here. So that looks like 5 waves. It finishes it off with the S&P 500 on the cash market. But here we have to look at this as the A, the B, and the C wave down here. And then we can look at this here as 1, 2, 3, 4, 5 for 1 and 2 and 3 and 4. I'm not getting 5 waves up here for this wave 1, you know. But this is really quite big here for a wave 4 compared to this one here. Maybe it's okay. At the 38.2% retracement level just here for the wave 4. If I had that as wave 3 here and wave 4 over here, so it would be basically, well, an ABC for wave 4. Won't go into that too much, but basically it'll either come to here, just, you know, it may not even take the lows out here, but a little bit more down here to hit this price point here. You can figure that out, and it's either that or we come down into the box. And if we're coming down into the box, we're more likely to come to 4-1 and pop its head down below here. And it's good if it comes below, because if it comes below, then you can just look for support as a classic trading levels pattern to the upside. So as soon as you get the first high above the level, then you can start thinking about being bullish, and then you can basically build onto the next one here, onto the 10 here, to the 20 here, looking for the first high above the level in all cases. So this is where you can build in positions at these points above here. Steady as she goes, Captain, you know. And once you get support on top of group 1 here, this is subgroup 1, the number, wherever you see a 3, it's going to be part of group 1 somewhere, in this case subgroup 1. Once that becomes the support there, then you can put in a larger position there. So 1, 2, 3, 5, and 8, the Fibonacci numbers, good to go. Yeah, so that's sort of where we are. In the meantime, if, you know, something happens and the market pushes up here, you've got to be long above this top here. And in that case, which would be a classic trading levels pattern sitting on top of that 430 there, something of that nature, the arrival, the reaction, the first high, blah, blah, blah. So you'd be looking for that. So we're not quite there yet, but the good news is that if this is wave 1 here and 2 here, then we're going to have a nice trend up through here. It's the third wave is going to push through all that churn we looked at on the weekly chart. This is the final push of the battle, you know. This is Ukraine getting ready for taking on Russia, mate, to wipe them out. So no offense to Russians personally, but the world doesn't like bullies. Yeah, so that's that really. Okay, and with the Nasdaq here, as I said, it looks a little bit chirpier, and I don't know if it's the same thing here as well, is that here I can count as 1 and 2, and then 1, 2, 3, 4, 5 for the third wave, little ABC for the fourth wave here. So it could just come back to the fourth wave here, 1 lesser degree. This is definitely a B wave up here, by the way, so don't worry about thinking about it as 5 waves. Well, that's what I got out of it anyway. I've got 1, 2, 3, 4, 5 for the A wave, the B wave here, and the C wave here. I'm not getting 5 waves up from that point, so I've got it as a B wave just to clarify things a little bit. And anyway, on the S&P it was lower, so it's telling me that because it took the top out here, all it needs to do is just clip the bottom out here to be an expanded flat wave 4 correction, and then good to go at that point. I mean, you could have an expanded flat as wave 1 and 2. It's possible. I mean, it happens, but more typically a wave 4. So the important point here is the trading levels, because at some point we're going to see this push up here. When it pushes up here, it's going to give you a classic trading levels pattern across here. It's going to come back and check the support there, and then it's going to move off. So just be prepared for some wiggle here at the top of group 1 here, minor group 1 of 13. So that's where we are. But also just be mindful that the cash market is looking at it as wave 1 and 2 to come back deeper. On the futures market, it looks like more like a wave 4 here. So it could, cut off, this previous wave 4 here. It could come 38% is 40%. So it'll either come back 40% or 50%, an extra 10% here, It's pretty much that. I don't need to go any further into all of that, really, into smaller time frames with that. So I'll just leave that at that. The Russell is much more bearish, and it's bearish because we've got this particular move up through here as 3 waves, and it's confirmed that it's 3 waves because it's taken that low out here. There's probably different ways to count this here, but I've got this as an ABC for the A wave, and then an A wave here. This in 5 waves, so an A, and this is in 3 waves, so a B, and then 5 waves here. So it makes a nice A, B, C here for all of this, an A and a B and a C wave coming down here for the B wave here. So then we're looking for 5 waves to move up here. So we're looking for 3, 4, 5. So once that finishes here, that's where the bear market can start here. So this is telling me, because this market moved below here, it's telling me that this is corrective. And if this is a corrective pattern, that means this low will be taken out over here. And it hasn't taken it out so far, so I'll take it out over here. Now, it's probably, if I wanted to look at the bullish market side of it, I could probably go wave 1 here and wave 2 over here for that. And look at this as an A and a B and a C wave down here. I could possibly do that. But it's kind of grasping at straws a little bit. So the bearish count for the bigger picture is quite real. And, all we need to see is, I don't know, some event. It could be a Ukraine event. It could be a banking event. I mean, skeletons can still fall out the closet. Let's face it, when the shit's happening, mum and dad will tell you everything's fine, So, not to worry about anything, so you can't, anyway, yada, yada, yada. Anyway, we're going to track these 5 waves up here. When it gets to the top here, then all I can say is that we just need to be just observant and quiet and peaceful and look for the next setup. It will work itself into a corner over here of being bearish or bullish, and I won't have any opinions because they can just get you into trouble. We'll just wait for the evidence to arrive on the wind, and then we will make changes. For the Dow Jones, it's the same thing again here. We're just looking for 1 and 2 and 3, 4, 5 to the upside. This is a bullish count here with wave 2 and 1 and 2. So I'm not showing you the bearish count here. I showed you the bearish count on the Russell. This is the bullish count for the Dow Jones. So you can see that, some people would sort of, disagree with me tracking both sides of the market. But I think because of where we are in the markets, in a big correction, I think it's the right thing to do, but, of course, people just want you to have one decision, and so they can base something off that, but I can't give that. So, I need to be true to myself. So anyway, all of this here, if you wanted to go long on this, I know a lot of folks would trade the Russell more than this. You can just buy new highs here at that point, to get wave 3 there. I wouldn't expect this blue wave 5 to be that long here, especially when this one down here was quite short. So I don't think it's a big thing. It will take out the top here. It could get anywhere from really 34,500 to 35,000 in that sort of space. We'll look tomorrow. If we get a drop here, then you can bring that down to this high here to look to go long at. And then if we're down here and the timing's right, we can look for the first impulse wave. We need the impulse wave and the ABC to manage the exposure, the initial the stop loss, the initial stop loss and the entry point. We need to know what's at risk at that point. So we can improve on this. We just need to be a little bit patient. But in the meantime, if it gallops off into the sunset, then jump on. Alrighty, cheers.